We are live, ladies and gentlemen. Thank you for joining us today. It's Tio and the Arcane Bear. Just going to make sure the live stream is rolling smoothly before we go too far into this. I hope you guys are all having a great day. Just going to do a little price and market update and dive in right away here. So I'm going to be opening up. Yeah, drop us those thumbs up. Make sure everything's going smooth. Okay, perfect. Okay. So here's Bitcoin on the daily. Longer time frames give us a bit of a clearer vision of where we're going, I think, in the future too. It's healthy and helpful to both study past and kind of present ideas. Present I look at almost as fiction thinking, so there's some fun books out there. If you haven't read Snow Crash, I highly suggest it. It's a really fun book, but again, the fiction is kind of our way of predicting the future, and it takes mostly into account past effects. So what we've been doing the last almost few months now, geez, it's been a while down, we've spent down here, around almost 100 days, looking at the potential of what is called a 3 peaks in a domed house. And it's often felt as a very bearish indicator. So you will normally see it something like this, but it is in fact a reversal signal. So if you go back and you were to study any of these, or the one we had most prominently shared was with a Tesla here, but the S&P 500 also goes over this. What you end up seeing, and as someone who studies Wyckoff frequently over the last almost 3 years now, one of the things I would have done and gotten wrong was looking at this as a reaccumulation pattern, and it would have scared me because these both look like they could have been rounded distribution tops, which we've gone over, and you can find fairly readily available if you want to do your homework on the internet. And here as well, both look very bearish. And what's interesting is in the S&P 500, when we've used this as our example, I have to scroll back here to get that data on board. Let's get rid of this. Got so much stuff open on these. Let me know if this stream is going smoothly, by the way, as well. Yeah, so here, this structure, again, I think what's interesting is its apparent initial bearish feeling, right? And a lot of people would double top. I remember actually at the beginning of this, because it was back here, specifically 2016, there were a lot of people who were really bearish in the stock market, and I changed my entire thesis and went, this is going to go up, and basically only up. And the leading indicator for that, which we share quite often as well, is the money stock. And I think what's so important about this conversation is recognizing that inflation is effectively the increase of price of every asset, every single thing you can buy. This happens through the inflation of the monetary supply. So again, down below, you have the S&P 500 performing this particular signal, and then you have, again, just a continual increase of the monetary supply year over year, which then reflects itself largely in assets, as these are like slower forms of money. You don't usually buy a house and take stock of its price on CoinGecko every day. So because these assets are slower moving, you're less likely to look at the price as one of the signifiers, especially over a shorter period of time. But here in the S&P 500, both 2001, 2008's collapse, or whatever was considered the bear markets of those times, quickly turned around after 2008 and was encouraged by even more inflation of the monetary supply, and then the subsequent increase in all the assets. So right now, what's interesting about Bitcoin is where we're sitting with its strength here. I think that we're right on the cusp of what's probably going to be a multi-year bull market, and that's what's exciting when we look at the S&P 500. And regardless of what's kind of keeping them it afloat, which is the apparent increase of the M2, is that as we go up, after this, it's kind of this abstractly powerful bull market. And this is one of the things that we had hypothesized in Bitcoin's early day, is that this is not money so much as it's technology, software. A lot of people have come to this conclusion, right? People much smarter than myself. And because of that, there may be a point where we hit an inflection where, just like you saw in the Weimar hyperinflation, that you see almost a total disconnect between some of these assets, and that you start to see the gauges go crazy. And one of the places this was really noticeable was when the pandemic first hit, that there was this big changeover that's a much deeper rabbit hole than we like to go down, but effectively there's cataclysm and and things to scare people at an onslaught, regardless of interference of any kind. So because of that human nature, the assets and what seems to be almost thousands of years of data at this point of inflation, and the interest rates behind these monetary currencies like Roman Empire, effectively, we've got so much data about how this works that betting against it is really quite silly. I think this is why so many people go wrong as traders, and why being an investor is a relatively simple way to make extraordinary amounts of wealth, because you're betting on the same thing happening, which is human nature and the unlikeliness of it changing. So I'm very, very bullish here. Again, look, the downside is we know there's chunks of supply of Bitcoin that could come rushing into the market. We don't know where they are, or like when they could free up effectively. So because of that, we have to take into account that there are always areas where we could slip down to. So making sure that you're not in a position to ever lose your assets is one of the most important places to start your thesis, whether it's with how much you're risking when you're doing anything, and with sending transactions to new wallets effectively. You should always make sure you're double, triple checking. It's just a good state of protocol to make sure that you're never putting everything at risk, right? So how do you do that on multiple fronts? But Bitcoin has a really unique function here, right? This is a crisis asset. When I first got excited, again, many of you will know, Bitcoin was at $90 and to $1,000. It was during the Cyprus banking collapse, and the governments came in and said, look, anyone who has over $100,000, we just take all your money. And they did that. That is what happened. And as much as people may like to trust the state and the government for whatever particular reason, history doesn't necessarily bode kindly to those. It seems to be in the favor of those who understand some of the dilemmas here, which is, again, a much broader perspective conversation around human nature, effectively. So because of this, this pattern, I think the strength that the S&P 500 showed after it reverted here, even if Bitcoin were to slip down to 20 grand, because of that, we do not know where some 1 to 2% of the supply are. There's a bunch of it that's even lost in trash dumps, adding even further to its deflationary nature. So because of this, we just want to make sure we are cautiously aware of that. You should not be opening leverage positions. You shouldn't be playing with leverage in your early days. Being an investor is really freaking easy, effectively, especially now that we have such huge confirmations. Buying Bitcoin at $90, okay, was a little bit silly and stupid. At $1,000 was a little bit silly and stupid still. This last 2 years, I think not buying, like if you're not into understanding these assets and acquiring like on a consistent basis, as it was a bill almost, you're doing something wrong, because you've missed the conversation of the importance of the story of the control of money over centuries, generations. So it's a really important conversation, I think, but whatever, it's just a deeper part of it. So everything still looks good to me. We could see a slip downwards. Just make sure you're not in a position where you're going to lose anything if it does that, and you're constantly able to continue to play the game. Build it in like a functioning strategy. Okay, so that was about it I wanted to go over today. There is one particular set of downsides I think that is also important. Again, remember that if we start to see closes like this, 39,000, and it starts to head back down, like where we get a noticeable change of character here, we could come down to $19,000. So being prepared for that downside and being able to continue to accumulate is important. Do I think that's going to happen? No. I still think we could see a slip down to try to test the 30 to the $29,000 range, but probably not much lower than that, because in effectively every other domed peak or 3 peaks in a domed house that we looked at, it was almost on the exact moment that point 10 and point 28 reached each other. Let's get rid of the M2 supply here. You see an instantaneous turnaround. Now here again on the S&P 500 in 2008 to the banking collapse, it was actually slightly lower, as you can see here. 0.28 extended approximately 12%. Again, this is a big chunk. 12% is a huge chunk, but I look at things more as a broad area. So point 10 is like this, it's like, how would you randomly draw it? It's about an area, right? I'm not trying to get it exactly perfect. So that's why it's important to understand that even though I'm ridiculously bullish about Bitcoin afterwards, moving again. If you look at Tesla's price movement after this, it's probably one of the most exciting things about this whole entire thesis. Is if we're right here, this bull market is going to be unlike any other Bitcoin bull market we've seen, and it's going to bring the whole fucking sector here with us. It'll be a spectacular time for anyone who's been participating. Again, this here, 0.10 and 0.28 were pretty much exact. We could make an argument that maybe this was 0.10, but I bet you if we drew it in, we would get almost an exact, yeah, here, look at this, the way 1, 2, 3, 4, 5, all point down like this, almost perfect. So this last spot here, 0.10, which we hit, for Tesla, again, this with Tesla was a lot closer. You didn't see any drop below that, nothing to return to the PSY here, not even close. But the strength afterwards, again, regardless of if there's 20 to 30% more downside, who gives a flying if this thesis is right, afterwards it's just up and out for a ridiculously long time. And I think that's what we're going to see. If you go back and again, you do, I guess you dive into the thesis as much as you can and look at the possibilities. So again, if any of you guys find other versions of Three Peaks in a Domed House in the past, especially if it's on a day, or right now we're on Tesla, a 3-day time frame, they're a lot of fun. Let's see how many other bullish reversal patterns we get here, or a bearish reversal, I guess. It initially looks very bearish and then reverses like a freaking rock star. Anyways, just gearing up to fly to the Bahamas for the FTX conference. If any of you will be out there, I'll see you there. I'm very excited about that. I'll take a few thoughts and questions here at the end, and then I'm going to dive off. Awesome stream is all good. Sound is a little low. Yeah, it depends, I guess. I can't jack out the sound on this microphone. Maybe it's because edit filters. Maybe there's a filter on here. Boom. Yeah, I don't know. It's hard to say. Add a filter. What kind of filter can I gain? I can get a gain filter. I can turn it gain up a little bit, it says. But by how much? I don't know. We'll go by 2.3. Let's do that. Yeah, it's still coming through quite low. I'm not sure. We'll figure it out one of these days, I'm sure. After 6 years of live streaming, I'll eventually get it right. Let's see. Yeah, we'll have fun out there. I like that. Thoughts on Pocket Network? Don't have any. Please look at the BNB chart. I'm not. I'm not particularly interested in anything outside of the gaming space right now. Maybe it's because I was never like really a gamer, and now I've started to enjoy it. I think it's super entertaining. Anyways, it's a lot easier than studying music too. I mean, I prefer obviously the outcome of playing music for 3 hours, but I like how I'm gonna say use the word non sequitur a game can be. It's like, hey, this is just having fun. Whereas music it's part of something else. Okay, sound is perfect every time. Okay, sounds fine. Well, we'll figure it out either way. What else did I want to go over? Oh yeah, just for fun. While we can here, we've seen a continuation of a loss of supply on the open market too. Now a lot of people talk about the idea. They're like, okay, and this is important to understand. When you're dealing with market liquidity, as the market liquidity decreases, the volatility increases. So volatility functions in either direction. It's not a you don't get it going only in one way. When there's less supply in the market, a little bit on or off can change the price dramatically. And what's been really, really nice and interesting here is that our primary thesis has actually done really well, which is that when we started to hit the bull market, as the supply decreases, again, remembering we know that there's a few percent maybe that could just slip into the market and could change this at any given moment. And there's also that slip in human nature that even a percent at the right time could do that, like another massive, whatever crazy, mind-blowing thing that comes next in the world of cataclysms. But barring that again, right now this looks extraordinarily bullish to me, especially when you look at the inflection point on a much closer relationship between both of these peaks here that we're following within the trading range. Okay, so knowing that we're following a trading range pattern, the price again is in gray and the supply is in orange. And again, here you can see this really nice, beautiful change of character where as the price first went down, this big chunk of supply came into the market and pummeled the price. But here, I think you're seeing the effect of a much smarter investor and retail hands day by day being slowly chewed out by being bored in their positions. And we've talked about this frequently, that a good reaccumulation, a good accumulation range, his entire job is to make the average person bored, who's like, money, real wealth does not move super fast. It's more like property, right? So Bitcoin viewed more as property means it shouldn't move as quickly, even though you could actually transfer way more efficiently than any other form of property here. The idea, again, is that one of the reasons why house property can stay stable is people are not as likely to just like flip houses. People still do it, but it's not as frequent. So here, as this supply decreases, I think this is a massive indicator of the power of buying that's going on in the background, just slowly chewing up the bottom. And that to me is what makes this thesis so exciting, is that, again, this massive decrease in supply that we've seen since Bitcoin has been sitting in this $40,000 range is significant. This alone could put the price, in my opinion, somewhere over like $65,000. Like the next even little bump up here, and again, look at the speed and the veracity. I was gonna say veracity. The veracity of the price result after. It's incredible. And even on such a diminished supply run here for Tesla, this first initial big wave here out of the back end was enormous. So if we look at Bitcoin again, you see even a slight increase in that demand based over, again, just that daily chomping. You think about it, they're not buying hundreds of millions all on one buy. They're trying to buy as many small bits as cheap as possible, effectively, right? So this is how you pull stuff off the open market. But this could could be out of the box into new territory before we even got a chance to double check 50K, just because of, again, how much supply has been reduced from the market. But again, also remember that this demand is consistent and aiming to get as cheap a price as possible. If a big chunk of supply were to come onto the market right now, even like 1/4 or 0.5% in the other direction, it could drop the price dramatically, because there would be fear again in the final retail markets. But if we go back to 2020 March and we look at the supply check here, what's interesting is of the price and the supply. So here, notice Bitcoin, right now what we're going to do is we're going to focus on 2020, the date the pandemic happened. And actually we'll show the $3,000. So this is the orange. As the orange increases here, this is the first time Bitcoin dropped to $3,500 after retracing from its $20,000 high in the 2017 bull run. And then here, look at this, just a slight accumulation, not even a downtrend in the accumulation of Bitcoin before it goes and rips right back up. And then what you started to see is, again, the supply come into the market and the price drop. But look at what's interesting really here, this divergence between the fact that there's a massive amount of supply coming into the market, and then all of a sudden it drops down and you go from 16 to 17.1%. So you get about a percent change in the supply. And this is what we had seen in 2020, was about about a percent of supply came into the market between $60,000, which then brought us down to 30,000. But every day since then, the supply has largely only been decreasing. So we don't too often look at too much data because it acts as noise within some of the rest of the thesis. But since March of 2020, we have really only declined. This bull market is not done. There's no increase of supply coming into the market. Like, look at the amount of supply that came into the market here throughout the entire period of 2020, like there's so much extra supply came onto the market just looking to take profit. There's a huge number. We haven't seen that turn around at all, which is usually kind of the signifier of the end of that market cycle. Boom, supply. And then here again, we were going up. Some new supply was coming onto the market almost daily to match this price. I don't think we've seen what this new bull market looks like. I think when this finally catches up with itself, it's going to look very similar to what we're parsing out with our idea with the S&P 500 and with Tesla and anywhere else you can find it in the NASDAQ at the multiple 100 years of data that we have recorded. You get this three peaks domed house 0.28 regardless of that 10 to 20% slip difference and multi-year straight up run afterwards. So yeah, I'm quite excited about that. That's about it. This is our guiding light for the rest of the thesis. If this is correct, then the rest of the theme will do very, very well. Again, one of the reasons why we like gaming. Actually, we'll take a look at that. Let's see what's going on in the price aspects. We saw some nice divergence on Polish. Look, see, this is one of the important parts. Again, remember, venture capital. I'm new here. I'm young, right? But it's important to remember it's volatile, and volatility can be softened through time and conviction. So it's always important to play the time and conviction game. I say this because I'm guilty of trying to think that everything will be compressed into a very short time frame of the future. And although we are right often, we are early. So being patient is of like one of the most important functions. So here what we're going to do is take a look at the RSI and Polis's price. So we've dropped dramatically 80% on a lot of the gaming assets, which is fantastic. It's exactly what we want to see. It means most of the early distributions are let out. And again, you have to take a multi-year approach. And I think studying and understanding how venture capital works is important. You know, Bitcoin is a very, like a pristine form of what we call an asset launch, because it was really derived from core community upbringing. Otherwise, someone like me wouldn't have been able to participate so early. And that's what's important. More than anything, I think the participation early is so valuable. You're normally always cut out through regulation in playing with anything like that. You should be a part of the upside reward because you are the thing that's making it so valuable. Like you take everybody off Twitter and Twitter's not valuable. So because of where Twitter's value come from, is it the code or is it the people that are using the code? Well, clearly it's the fucking people using the code. So who's the most valuable part of Twitter? Well, the people are then. It's not Twitter. Twitter's just a substrate for those people to connect. So who's the most valuable part? The people. Twitter's fucking worthless, effectively, right? So understanding that, I think, is important. So Twitter now is this valuable company. Any of its upside, you're not rewarded for, aside from your potential participation if you don't piss off the censors about what you would like to communicate or pontificate on. So it's a pretty important to understand that participation, your ability to function within these games is actually, I call it a freedom, I guess, if you will. Anyways, so nice to see this 80% retracement. It means we're pretty damn close to the bottom. And right now we're getting a little bit of bullish divergence here. And we're seeing that in a few other places. And we've seen a lot of strength, both in Luna, near. Oh, yeah, I wanted to go over near here. Baird and Jerry's been doing a great time here. We're going to have to, see, we see some, we see the opposite here. You see a bit of bearish divergence on near at the moment. We are on the 3-day though too, but yeah, little bit of bearish divergence on the top for near here. We're quite high up though. Look at this. Near's been a strong performer throughout this. 694% since June. So this, first off, I want to point out that this space is still booming. You know, it's important to recognize. Actually, it's been a good time for most of the layer one since May. Luna was one that Zubin had shared in the private group too. Look at all this strength. Yeah, here's February 2020. That was after the primary Bitcoin drop. That's a lot of strength, hey? look at this is incredible. And just from June, you just forget, from June to now, 1,700%. Like the fact, again, that you can participate in this in some way, shape, or form, like the early growth stages of any company or product. Let's go with software protocol, because largely what these are, they're not really companies anymore. They're a different form. And it's so that you can maintain, and as you should, earn some of the ownership for participating early in any of these ecosystems. And look how much better they pay. I mean, think about if you had bought a .eth name, they gave you like $15,000 in Ethereum name service tokens. I mean, if you had sold at that moment, they're quite a bit cheaper now, but you're paying governments your whole life and give you $13,000 for buying a domain name. And I think, again, this is really just a reflection of the amount of unparalleled potential in a financial ecosystem that is not totally corroded at its wires. Anyways, so we're still bullish fundamentally, but again, be careful. You have to learn how to measure downside risk as part of every early investment. I think it was Warren Buffett that says, rule number 1, don't lose money. Rule number 2, repeat rule number 1 effectively. And often, as excited as you may be to be able to make a large amount of wealth, the time horizon is slow, but it's manageable and it's attainable by literally everyone. Like, you don't have to be a super genius to do well in investing. You just you have to understand human nature and what people like. I'm not. I mean, it's super easy. they make it pretty obvious, right? You're usually using the same technology. You're usually on the things like Twitter and Facebook. So being able to have accidentally invested through participation, and again, this is what I would look at as I call them, participation rewards, I guess. Maybe not the best name, but how do you are the value in any of the systems of networks that are out there. So how do you grow that reputation and value? And I think that this sector is drawing that in. It's one of the things that really blew my mind about not the Bored Apes, but just this idea of digital identity, cultural identity. I mentioned this, I often think of identity as like a passport or a driver's license or your identification card, but a lot of identity is actually how we dress ourselves, how we talk, what we like, what people's religious backgrounds are, and that's largely how we've identified ourselves. These newer forms of identity, I think this is where things get really interesting for the potential for that on-ramp for kind of a sovereign identity within the gaming space. It's just been blowing my mind recently. So this technology has consistently brought new ideas to the table that I did not yet see. And I've been astounded all the time. So I think we're still so freaking early to not even be able to grasp the potential often of what's happening as it's happening. There's just too much going on. There's too many brilliant people that are playing in this space because the incentives are extraordinarily well aligned. And everyone gets to participate early. No, it's moved past borders, and just one of the fascinating things for me is we get to participate in a lot of these conversations, and we live in the middle of the freaking jungle. So it's an upside to, let's say, the decentralization or the kind of the source of the nature of a lot of this power is that you as the participant are what makes a network or a system or a governance equation valuable. Like the social contract, it's everybody participating at once and agreeing by those terms. So technology is a potential very interesting answer within this conversation, as long as we can all verify and identify the kind of the truth of the code that's taking place, because that's a heated conversation. Anyways, very happy about what I think is about to happen next, because I think it's going to be a game changer for Bitcoin. It's going to be rough too. Mind you, this was always kind of paralleled in the idea that one thing's up is usually another thing's down, right? So it takes one giant tree to fall for another tree to grow in its place, because it needs all that sun and nutrients. It happens pretty quick though, if you're patient. Anyways, it's the end of my rant for today. Thank you guys all for joining us. Can you play games on Twitch? Hey, fun. We're starting a new gaming channel so we can post more of that stuff, because I've started to have fun with it. I want to keep Arcane Bears just the eclectic idea that I've started it at. I wanted to do more vlogs, but it's just been a little bit tricky. We'll try to get back into that. Yeah. Again, I seeing a retest of 30,000 might be in the cards here. I wouldn't totally clock it out of the network yet, but this kind of test of the point of control still really looks good. So I'm not, boom, right on the point of control. That red line, that's like our main area. Oh, okay, awesome. Well, thanks, Zach. We'll see you guys in the next episode.